And we're going to talk about what's going on in the marketplace. So for those of you that would like to get some market data, we're going to give you market data right now. And again, this is all sponsored by the Texas REIAs, the largest network of real estate investor associations and real estate investors in the great state of Texas. 150,000 members, participants, and attendees going all the way back to 2003. And the Texas REIAs provides resources for real estate investors. So we're going to share some more resources for you and with you right now. We're going to do a market update. So what's going on in the marketplace? What is the biggest change that's happened in real estate over the last 3 or 4 years? What's gone up?
Investors have been buying houses.
Inflation. As a result of inflation, what happened?
Equity goes up.
Interest rates went up. Interest rates went up. So interest rates have changed. Okay, great. Let's talk about that. Interest rates are different. Poll of the audience. What do you think, guys? Are interest rates high or interest rates low right now? Let's do a vote. There's no right or wrong. Who thinks interest rates are kind of high right now? Who thinks interest rates are kind of high right now? Who thinks interest rates are low right now? Okay, we're not getting everybody to participate. This is a participation at practice. You have two choices. You can't be wrong. So all you got to do is share your opinion. In your opinion, who thinks interest rates are high right now? Okay, who thinks interest rates are low right now? Okay, we got a lot of highs and some lows. My opinion, interest rates are normal right now. Okay, I've been buying rental properties for 21 years. Most of my rental portfolios have interest rates between 6.5% and 7%, which by all historic standards are normal. Okay, now a few years ago, interest rates got down to 3%. Yeah, 3%. Now prior to that, prior to a few years ago, prior to that, when did they before that get down to 3%? Anybody know? When was that? That was never. It never happened. Not in your lifetime, not in your parents' lifetime, not in your grandparents', not in your great-grandparents' lifetime. It never happened before. It was not normal. Okay? Now, when is it going to happen again? Probably never. I would guess never in your lifetime, your kids' lifetime, your great-great-grandkids'. I don't know. We don't know. But I would say the things that would have to happen to make that happen again, you're probably going to be more worried about the zombie apocalypse than you are about interest rates. Okay? So we don't know. But I'm going to tell you personally, I like normal. I don't like abnormal. Like, I don't like investing in abnormal. I do not. I do residential. I do commercial. A few years ago, people were buying apartment buildings. It was very hot. They were paying top dollar. And they were getting them financed with these 3% mortgages. And even if you paid top dollar, you got a 3% mortgage, you could still collect enough rent, all right, to pay the mortgage. But, you know, commercial loans are not 30-year mortgages, guys. Commercial loans are like 5-year mortgages. Okay, so they get refinanced every 5 years. And now all these properties are getting refinanced. Well, interest rates are not abnormal anymore. Now they're normal. And if you try to refinance it for the same loan you had before, you know, but the interest rate is 6.5% or 7%, right? Now you're not collecting enough income to pay the mortgage. So there's properties that are going bad, right? When it comes to commercial real estate, you got to remember what Wayne Gretzky says. And I don't skate to where the puck is going. Or I'm sorry, I don't skate to where the puck is. I skate to where the puck is going, right? You got to ask yourself the question. If you're going to flip something in 5 years, because that's typically a commercial syndication, what's the market likely to look like in 5 years? Well, if you're going into a market that's never happened before in the history of the humanity, is that something you should expect to continue? I would say that's not something that you should expect to continue. So interest rates went back to normal. Okay, so let's talk about interest rates. How do they affect home prices? When interest rates go up, what do you think? Home prices go up or home prices go down? Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? Okay, we got a lot of downs and a couple ups. Here's what I've observed. It causes this to happen. You see, here's what I've discovered. Real estate doesn't actually care about interest rates. Believe it or not, it doesn't care about interest rates. Real estate cares about two things: supply and demand, supply and demand. only in as much as it affects supply and demand will it affect home prices. Now, for sure, when interest rates go up, mortgages are more expensive, fewer people can afford them, right? They're less affordable, and that pushes prices down. That is correct, but there are some offsets, right, on the supply side. Let's talk about the supply side. Normally, 2/3 of houses that are for sale are resale, and 1/3 are new construction. That's the normal mix. Right now it's inverted. People are not selling their house. Why aren't they selling their house? The economy's okay. People should be saying, honey, let's buy a bigger, nicer house. But they're not doing it. Why are people not selling their houses? Because they got one of those 3% mortgages and they don't want to give it up. So yes, there's less demand, but there's actually also less supply. Interesting. In fact, there's so much less supply, believe it or not, we are in the middle of a housing shortage. Who's heard of that? How many of you heard that? Yeah, we have 6 million fewer houses in this country than we have for everybody that needs a place to live. And when you have a shortage of houses, what does that do to home prices? Pushes them up. And then one more thing is affecting home prices. Why did we raise interest rates? To battle what? Inflation. Let's talk about inflation. You know, most people, when they talk about inflation, they always talk about it with such derogatory terms. Inflation is bad. We have to whip inflation and stop inflation. You know, personally, I have a different perspective. Personally, I love inflation. I just have another name for it. You know what I call it? Appreciation. When money becomes worth less, what becomes worth more? Assets. When you own $30 million worth of houses, you go to bed at night hoping for more inflation, appreciation. Yeah, because the stuff you buy with money becomes worth less. If your wealth is in assets, like how many of you have owned a house for the last 3 years? Nice, you're a lot richer than you were 3 years ago. Congratulations. What if you had 20? What if you had 200? What if you had 500? Can't go back. You can do anything you want going forward. Whatever you think about house prices today, 20 years from now, you're going to look back at today, it's going to be exactly the same as what it looks like today when you look 20 years ago. So here's an interesting chart. This is interest rates versus home prices going all the way back to 1970. From 1970 to 1981, home mortgage rates got all the way up to 18%. So for any of you that are belly aching about 6.5%, okay, give me a break. Mortgages got up to 18%. Now here's the more interesting data point. When interest rates went up, what happened to home prices? They actually went up. Interesting. Median home prices, that's this red line. Now when interest rates came down, what happened to home prices? They went up some more. When interest rates went up and down, what happened to home prices? They continued to go up. Now there's some bubbles. There's a big bubble. 2008, 9, 10, remember that bubble? The bubbles were not from the interest rates, right? The bubbles were other things in supply and demand. So what's going on? Interest rates went up, demand went down, supply went down, and prices went flat. So let me show you some data. Home prices in Texas. The average price house in Texas is $422,000, up 3.3% year over year. Median price in Texas, $335,000, up 1.5%. Okay. Months of inventory. Now this is really, if you only look at one data, want to know what's going on in the marketplace, this is the one to look at. Months of inventory. What is months of inventory? Here, let me explain it to you. If you stopped adding any houses for sale to the MLS, okay, let's not add any more houses for sale. Let's just sell what we have until we're out. How long would it last? And the answer, 4.8 months, which is also the average amount of time it takes to sell a house. Now, some more, some less, that's the average. Now, let me put that in perspective. Okay, they say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If there's right around 6 months of inventory, you have a neutral market. We're in a seller's market. Now, perspective. A year ago, we had 3.8 months of inventory. A year ago, we had a hot seller's market. Now we have a lukewarm seller's market. But it's still a seller's market. History. 2021, prices in Texas went up 18% in 1 year. 2022, they went up another 10.7% in 1 year. 2023, flattened out. So prices went way up, they went up some more, and then they just flattened out, right? Less demand, higher interest rates, less supply, fewer sellers. And the price, flat. There's things pushing up, there's things pushing down. Now, just over the last several months, prices have started to come up a little. And I do want to preface this by saying this data all comes from the Texas A&M School of Real Estate and a number of online sources. We're not here to try to persuade you of something. There's a lot of groups out there that are always trying to convince people the market's going up. When we think the market's going up, we're going to show you the market's going up. When we think the market's going down, we're going to say the market's going down. When we think it's flat, it's flat. We have strategies for up, down, and sideways, right? But you do need to be a student of the market, right? So we're going to make you a student of the market. All right, Houston. Average price in Houston, $423,000, up 5.2%. It's actually the hottest market in Texas. Median price, $335,000, up 2.7%. 4.4 months of inventory. 2021 up 16% in 1 year. 2022 up 10% in 1 year. 2023 flat, just like Texas. Lease prices in Houston up 1.6%. What does that tell you? Are apartment buildings full or apartment buildings empty? They're full. They're full. All right, Big D, Dallas, Fort Worth. Average price house in Dallas, $509,000. Average, second most expensive city in Texas. Median price, $400,000, up 1%. Average price, $509,000, up 3%. 4 months of inventory. It's the hottest market in terms of inventory. Lease price down 1%, not really, I mean, it's basically flat. 2021, Dallas, Texas, up 20% in 1 year. 2022, 15% in 1 year. 2023, flat, up 1%, which we'll say is flat. Dallas, I don't know why, but for some reason, Dallas has always been the bellwether of Texas. If you want to get an idea where Texas is going to look at Dallas, it's the first move. I don't know why. First to go down, first to go up, first to do whatever. So inventory's been dropping in Dallas. I don't know why, but Dallas has always been the bellwether. There's certain things you look at. Inventory you look at. Condominium inventory, you especially look at that. That's the most leading indicator. We call condominiums the canary in the coal mine, right? First thing to go, last thing to come back. Man, if condos are hot, everything's hot, right? So if you really want to know what's going on, look at condos. Austin, the average price house in Austin, $560,000 average. Holy cow. We did a little research on this, trying to figure this out. You may not know this. Where's the name Austin come from? It's actually Latin for San Francisco. Yeah. Elon Musk moved to Austin. Samsung, Apple, Meta, brought all these engineers, six-figure incomes. Median price $429,500, up. I'm sorry, down 1.4%. So basically, it's flat. Months of inventory, 4.4, not bad. But Austin's an outlier, and I'll tell you why. Something that never happened before happened in Austin, and let me show you what it was. 2021. In 2021 in Austin, Texas, prices went up 29% in 1 year. In 2021 in Austin, Texas, we had 0.4 months of inventory, less than 2 weeks. In 2021 in Austin, Texas, you put a house on the market, you get 11 offers in a weekend. 1 would win, 10 would lose. The 10 that lost, they put an offer on a second house, they got 11 offers in a weekend. 1 would win, 10 would lose. And this happened over and over again. until people started screaming at their realtors. What's wrong with you? I keep getting outbid. You're giving me bad advice. What do you have to do to buy a house? And it turns out in 2021, in that abnormal year that never happened before, it became normal for people to buy houses 5 to 10% above appraised value. Do you know the bank won't even let you buy a house above appraised value? Your total down payment and your total loan cannot exceed by even $1 the appraised value. If you really want to buy a house above appraised value, you got to put your down payment, you got to get the loan, and then you got to take a big sack of cash and pile it on top of that. And in 2021 in Austin, Texas, it became normal to do exactly that and to buy houses 5 to 10% above appraised value. In 2022, it didn't get much better. Prices went up another 10.4%. And then in 2023, it was the one city that corrected, went down 8%. So most of Texas went up 30% and went flat. Austin went up 40%, right? Came down 10 and went flat. You bought a house 3 years ago, you made 30%. Congratulations. You bought it 1 year ago in Austin, you lost 10%. And that's just perspective. And then finally, we have San Antonio, the most affordable major city in Texas. The average price house, $372, and median is $309. Down 2%. Months of inventory, 5 months of inventory, slowest market in Texas. 2021 up 16%, 2022 up 12%, 2023 down 2%. Also basically flat. I call up 1, down 2, I call that flat. So where are we going from here? Well, let's talk about what's driving the market. Starting with the economy. Now overall, the economy, real estate doesn't care much about the economy. It's not a direct correlation, but it is an indirect correlation. It's psychological. If people feel good about the economy, they're more likely to buy real estate. If they feel bad about the economy, they're less likely to buy real estate. Everything about the economy is pretty good. Consumer confidence is pretty good. Unemployment is good. Stock market is good. People look at the stock market, they got money in their 401k, they feel richer. Jobs are being created, so that's all good. What else? Affordability. This is interest rates. This is not good. Interest rates went up, and houses are less affordable. House price trajectory is flat. That's not really up or down. That's flat. What else? Supply. You know, remember it's supply and demand. Active listings is flat. Months of inventory is pretty good. We still have a housing shortage. We don't have enough houses. You know, 4.3 months of inventory, 4.8 in Texas. Housing permits trajectory, also we're not building enough houses. Money's a little harder to get. Builders aren't keeping up with the demand. Construction labor. Now this is something to kind of mention. We got a problem. Contractors, general contractors, they're dying. They're getting old. We're not replacing them. The average general contractor is like 58 years old. Right? And the kids are not becoming general contractors. So if you got a teenager, here's my advice. Don't send them to college. Okay, buy them a hammer. Seriously. Do you know plumbers make more money than surgeons? Now think about that. Plumbers are making more money than surgeons. Surgeons get like $600,000 of student debt and have to go to school for like 12 freaking years. A plumber, you could be making more money in just a couple of years. I mean, it's crazy. So yeah, you know, get them a hammer. They don't have to work for some idiot. They don't have to go to collect a bunch of student debt, right? They'll make a lot more money, right? They'll be happier, right? So yeah, we need more contractors. And then housing demand. Let's talk about housing demand. Closed sales trajectory flat. Pending sales flat. But this little bullet down here at the bottom, migration. This should be a triple size bullet. This is actually probably the biggest and most important bullet on the page. What is migration? Migration is the ratio of people moving in versus people moving out. It's basically population growth. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Yeah. And there's another 5 million people, we don't know where they went, but a bunch of them are here too. Right? And they all need a place to live. And we're not building enough houses. So we have a big shortage of houses. And we even have a shortage of apartment buildings for the most part. So we got a problem with migration. And then I guess wild cards, right? We just had an election, right? What's going on with inflation? Got a couple of wars going on, etc. So I don't know, guys. Let's do a poll of the audience. What is your opinion? Who thinks house prices are going up versus down? Who thinks house prices are probably going to go up from here? Who thinks house prices are probably going to go down from here? Okay, wow, a lot of you think up and a lot of you down. I'll give you our forecast. This is our forecast. The market bottomed out, and that was it. And it wasn't very exciting. The bottom was flat for about a year. And then just a few months ago, it started to go up a little. But that being said, we don't expect much. Interest rates have come down a little bit. They're expected to come down a little bit more, right? And what we expect is that sales will start to flatten out and come back. We expect prices on average in Texas to be up about 2% this year. So not lots of things pushing up, pushing down, but there's more pushing up than pushing down. So we expect prices to come up, but not a lot, a little bit. Was this helpful for you guys? Alrighty, well, fantastic. I will take any questions and then we'll wrap things up. Any other questions you guys have? Go ahead.
Is there interest from investors on just whole plots of land to build houses on? Or
Yeah, we have, we do land development, and there's all kinds of things. You know, when you have land, like raw land, there's a lot of land in Texas. You have to ask yourself the question, what's the highest and best use of the land, right? Like, where is the land, right? I mean, could you subdivide it, right, and create a whole bunch of lots? You know, we're doing a lot of things with land. Sometimes we build storage facilities, or sometimes we build an apartment building, or sometimes we build a strip center, triple net, or sometimes we do subdivision development where you carve it up. We do a lot of things where you buy a 100-acre and you chop it up into 10 acres, and you sell little ranchettes, which are very popular in Texas. So you have to look at whatever land you have and look at the highest and best use of it. And you would want to run the numbers, depending on how it's zoned and where it is, on what would scenario A, B, C, and D look like, right? But absolutely, yeah, there's lots of land in Texas, lots of opportunity land.
What you do, is that different from syndication real estate investment?
So we do syndications. Syndications are usually with commercial real estate. So a syndication is like, I want to buy a $10 million apartment building. The way I do that is I get a $7 million loan, commercial loan from a bank. That loan is based mostly on the property, not based on me like a regular loan, like a residential loan. But to get the $7 million loan, I got to get $3 million cash to put down. So I would do a syndication. I would invite 60 people to all invest $50,000 apiece, or some combination of 100 and 50 and whatever to raise the $3 million. So when you're pooling millions of dollars together from multiple people, you're creating a syndication.
And then the investor or the people who are putting money in,
Yeah.
they stay back and you do the work and then
Yeah.
you get the check.
Generally, the way it's done is an LLC or an entity buys the property, the apartment building, right? The investors that put the $3 million in become limited partners in that LLC. So they own a percentage of the LLC. The sponsor, who's the quarterback who's putting the deal together, they get a share of the profit, typically 20 to 30% of the profit, right? And then they get paid in some other ways as well, right? So yes, you can invest in a syndication. That's called private equity. On average, twice the return of the stock market with less risk. So, but I always say to everybody, only invest in things you understand with people you know. So if you're interested in commercial real estate, get some more training. We have a workshop coming up online Thursday night, and we have some workshops coming up in January and February that are live commercial workshops. I'll put the little link for that up as well. Again, if that sounds interesting to you, I'll give you a little link on how you can get more information on that. And I recommend everybody learn about commercial. Everybody that ever gets into residential real estate, they all say the same thing. I wish I started sooner. everybody that ever gets into commercial real estate always says the same thing. I wish I started sooner. So usually it's self-limiting beliefs that keep people from getting started, but you should definitely do commercial real estate. Other questions? Yeah.
So, I mean, I'm not sure if this is a question. One of the main reasons I came here
Yeah.
is because I have a house worth in REITs.
You have a house what?
I have a house worth in REITs, like real estate stocks.
Okay.
So, that gives me 6 to 8% a year.
Yeah.
I can reinvest it, et cetera. I don't have to
Yeah.
stress out all that
It's a totally passive investment. But I mean, there's so many middlemen when you put your money in a REIT. A REIT is like a mutual fund for houses. It's okay, nothing wrong with it, but it's not private equity. Private equity typically has twice the return of a REIT.
Okay.
And you get tax benefits in private
I was
equity.
worried about the, coming here, I was learning about the stress and all that.
Yeah.
Is it worth it even going after something that I can already get 6 to 8% on?
I wouldn't invest in a commercial deal that gave me less than 15%. I mean, I wouldn't even look at it. I mean, 15% is like entry. Okay, so if it's not 15% or higher, I'm out. Because there's so many things you can do in private equity that are 15% or better. That's a big difference. And the tax benefits. You don't get all the tax benefits. You don't have to take the depreciation. You can't do 1031 exchanges. With commercial real estate, you can infinite returns. I mean, there's so many things. I mean, not only get twice the returns, but the taxes are so much better. So you get twice the money, and you can potentially do things to defer the taxes indefinitely. I mean, there's just huge benefits. But it's a little more complicated. A REIT is no more complicated than buying a mutual fund. Yeah. Yeah. To invest in private equity, you got to know stuff, right? You have to be accredited or a sophisticated investor, which means you need education. And, if you want to learn. And I'll tell you my rule as well. I only invest with people I know and things I understand. So look at it, learn before you just throw your money into something. Yeah. Okay. More questions?
Are you teaching the workshop, the 3-day workshop?
I am. I teach the whole thing. Yeah, it's all me. Yeah. Question?
With all the commercial loans that are being refinanced in the next 3 months,
Yeah.
the percentages that are
Well, here's the thing. Commercial loans are always being refinanced. All commercial loans are typically 5-year loans. They're not all. They could be extended, but commercial syndications are typically 5-year syndications. People don't want to invest in something for 30 years. They want to invest in something for 5 years. So yeah, they're constantly being refinanced.
the ones that were invested during 2020 with
Yeah.
the interest rates at
Yeah.
2.7 trillion at the end.
Yeah.
What is the move to go, considering
What are the what?
there's about to be a wave of foreclosures with all of the different.
We've been waiting for it. It's not really happening. And the reason it's not really happening is because the market's pretty good, right? There's still demand. It's not like there's all these empty apartment buildings. The apartment buildings are full, right? So it's not that they're getting foreclosed on. Some are, but for the most part, they're just getting refinanced, right? And they're not making as much money as they were before. But it's not like they're defaulting. They're being sold at lower prices. There's cash calls. People are having to put more money into the deals. In some cases, they're not making any profit on the deals, but there's not like this big wave of foreclosures.
But being based on the DSCR formula, what does that mean that the property go down like a big amount of value and therefore?
Yeah, but I mean, here's the other thing, right? The value of a property is a function of income and cap rate. Cap rates follow interest rates. Interest rates are in what trajectory? Down. Cap rates are going down, values are going up. So there's offsets. It's not as simple as just saying, oh, they're not making as much money. They're making even more money. Rents have gone up. Rents have gone up because of inflation. Inflation makes rents go up, so the income's going up. Cap rates are going down. That's pushing prices up, but the mortgages are much more expensive, right? So you have to put more money down when you buy them. Used to be able to, you got an 80% loan. Now you can get like a 70% loan. Right, so the new buyers are buying them with more money down. What's that?
So that you get positive cash flow, right?
Yeah, I mean, every property is different, but yeah, and this general set of conversations is mostly around multifamily. Multifamily is just one of many assets. Okay, we do storage, we do multifamily, we do RV parks, we do mobile home parks. Mobile home parks, I got to tell you, some of the highest returns I've seen are mobile home parks. And a lot of people are like, oh, mobile homes. Yeah, these are little gold mines, guys. Mobile homes are not mobile, right? It costs like $10,000 or $15,000 to move one. They never move them. The people that own them don't move them. So they pay rent on dirt forever. And in a mobile home park, the only thing you got to maintain is dirt. And the only way to maintain dirt is to keep it dirty. You know, it's not that hard, right? You know, so yeah. And one of the hottest commercial things we're doing a lot of residential assisted living. We're taking ordinary houses, and instead of renting the house out for $1,000 a month, we're renting each bed in the house out for $1,000 a week. So we can generate $25,000 or $30,000 of rent from a house, right? That's freaking cool. And it doesn't have to be a good deal. It has to be like a house. So if commercial's hot for you, you know, take a picture of that, join us online. We'll get you hooked up with some commercial training. And we have some commercial workshops too. Okay. Most people go to both residential and commercial. Generally, they go to the residential first, and then they go to a commercial second. They really go together. Most of the people that come to the commercial have either been to residential or had some level of experience. I mean, most people that come to the residential workshop are newbies, so I assume that people are coming in or, you know, need to learn from 0 to 100, right? The people coming into commercial, I assume they have some prior training before they get there. Question? No, I mean, but why would you not want to do them both? What are you thinking? You just not interested in residential?
No, I'm interested in both. I just was asking if I go to the commercial.
Yeah, I mean, I mean, you certainly can, but I mean, you know, in the residential workshop, I review all the terminology, and you know, I assume everything I say a lot of people have never heard before. In the commercial, I take some more assumptions that people know some of the terminology, right? So if you've never been to anything before and never done anything before, and you go right in the commercial workshop, it's going to be a little more challenging. Some of the I'm taking for granted there's some level of understanding of terminology. That's all. Yeah. Question?
So if a buyer buy house,
Yeah.
is subject to permission.
Yeah.
Like subject to agreement.
Yeah.
After 5 years, buyer decided to sell it.
Sure.
So,
Sell it anytime you want. It's your house.
Signature or permission for sellers.
What's that?
They needed permission or signature to sell it.
No, they don't own the house. If you sell me your house, if you sell me your house and I want to sell it in 5 years, do I have to go back and ask your permission?
No, subject to.
Yeah. If you sell me your house, subject to, no subject to, cash, no matter how you sell your house, if you sell me your house, transfer your deed to me, and then 5 years from now I want to sell it, do I have to ask your permission?
No, but it did seem the force of the name, yes.
The deed transfers, right? That's the ownership. And subject to, the deed transfers. If I buy your house subject to, you're giving me the deed. You don't own the house anymore. If you die, if you get sued, if you declare bankruptcy, it doesn't affect me. I have the deed. You don't have an asset anymore, right? I have the asset. You have a liability. Your name may be on a note. You extended your credit to me, but nobody sues somebody for their liability. They sue somebody for their asset, right? You know, so no, I don't need your permission. I don't need anything. You can move out of the country, do whatever you want, right? Die, get shot, run over, declare bankruptcy. It doesn't matter what happens to the seller after they give you the deed. Okay. Question?
It's more of a minute question, but you said you don't have to put down any money to make the basic contract. Is that correct? That's why you had to have like a small sum of money to make a contract.
So I do a $10 option. I do a $10 option. It's called consideration. Technically, it's been litigated. You don't have to even do that. Okay? You don't. We do direct investor to homeowner. There's no realtors. These are not on the MLS. This is not. There's no laws. There's no rules. You can do anything you want, right? But I do a $10 option. When they sign the contract, I give them a $10 option fee, which is a receipt of contract. It's called consideration. Technically, if you terminate the contract, which you can do, you don't get your $10 back. So I call it no money. I do $10. So we'll say no money and $10 is the same thing. But that's normal in off-market real estate. And if anybody asks me for more money, I'm going to say, I'm not going to pay you money to help you sell your house.
But for houses that are on the MLS, you do have to put down a fee, correct?
Why would you buy a house on the MLS?
Well, I'm just saying, like, as a general rule, I'm just curious.
I don't know. I don't buy houses on the MLS, so I wouldn't know how to answer that question. I mean, I guess if you want to buy a retail house, but then I don't know why you're here, right? Because we don't buy. I mean, I'm teasing you a little bit, but I mean, as a general rule, we don't buy on market, we buy off market. Now, in the MLS, you can do anything you want. You can make somebody an offer with a $10 option, but the realtor might push back a little bit. They might say, oh, no, it's got to be $100 or 1% or $1,000 or this or that, depending on whatever. And they're going to try to push back a little bit, and you can say whatever you want. You can make any offer you want, with a realtor, they're required to present your offer to the buyer, to the seller. Whatever the offer is, you can say, I offer 10 cents, and you have to show up at the closing naked. And you put that in the special provisions. You can write that into the contract if you want to, and they have to show the seller. Right? Now, I'm not sure they're going to agree to that, right? But you can do anything you want. Okay? Yeah. Question?
I've talked to a few investors, and there seems to be, from my experience, like the stigma against wholesalers.
There's a little stigma against wholesalers, yeah.
But as you pointed out, it's a great way to make capital in a relatively.
There's nothing wrong with wholesaling. But here's where I push back on wholesaling. A lot of people say, I'm just going to do wholesaling. I'm going to be a little lazy. I'm not going to educate myself. I'm just going to do this one thing because it's easy to understand. You're spending all your time doing the hardest thing that makes the least amount of money.
Right.
Why would you do that? Why not learn all the ways to do it? I'll teach you 8 other no-money strategies. So if the only reason you're doing wholesale is because you don't have any money, great, I'll teach you 8 other ways that work better than wholesaling. But that being said, there's nothing wrong with wholesaling. It's a tool you should put in your tool belt.
I was wondering if you have a way, a method, a system to bridge the gap, not just with wholesaling, but your other methods of no money down investing with the actual investors.
Yeah. There's 9 of these 12 strategies are no money strategies. So absolutely, come to the workshop. We'll cover lots and lots of ways to do this with no money. And whether you have money or not, you don't have enough anyway, right? Which is what I always say to people. You need to have money, right? I mean, nobody has enough. Yes, you should definitely learn all the strategies. And if you have money, great, but it's not going to help you. In fact, the odd thing is, a lot of times when I help people get started that have money, they actually take longer to get started. And the reason is because they use their own money as a crutch. So they find a deal and they use their money to buy the deal. They haven't learned to do it with other people's money. They haven't learned to do it with no money. So all their money is now tied up in that deal, and then they're frozen. They can't do another deal, right? Because that money is frozen in that deal. So they got to wait until they sell that deal before they do the second deal, right? So the people who have no money are forced to learn to do it the right way right up front. Right, so you have money or not, you still have to learn how to do it with other people's money. You still have to learn how to do it with no money. Okay, and that's why. Any other questions? Yeah.
I'm 17 and I have a house with as well, but the thing is I struggle a lot with credibility because of my age.
Yes.
So is there any advice you have?
Yes, I do. Great question. Most people that do this are 30s, 40s, 50s, 60s, 70s, right? Every once in a while we get 17 or 20 or whatever. And the biggest problem you're going to have is exactly that. You don't look like you got enough money to be a real estate investor. So what some of my young investors do is they literally, when they talk to a seller, they get somebody with gray hair to stand next to them, right? And didn't you come to one of my workshops or no? You did. You remember Nancy? I started working with her at 24. She had the same problem you have. Okay, and nobody was taking her seriously, even though she has stature. She doesn't have that problem anymore. But she would get somebody that basically had gray hair. She'd say, stand next to me, don't say anything, but look like you have money, right? And the guy looked like he had money. And she'd say, my partner and I are here to blah, 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 blah. She'd do the whole negotiation. Now, after she'd got a few under her belt, she had more stature, more confidence. She'd kind of talked her way over it. But yeah, that's a little trick you can do while you're kind of getting started. Absolutely. Okay. All right. You can do that too. Yeah. Awesome. That's great. Yeah, I like it. Yeah. All right. Any other questions, guys? All right. Well, hey, guys, have a wonderful holiday season. Happy New Year's. And I will see you guys at the workshop in January. So see you guys in January. Please join the REIA. It's going to be the $100. Make it a Christmas present to you and whoever you're bringing with you. So I'll see you there at the workshop, guys.